is with us, a director at Elixir Equities. Dipan, thanks for joining in. Coming to you a little late today for a very, very big and somber reason. But we also have a market to look at. So to start off with, let's look at whatever is happening with Ola. It's just the scrutiny is only intensifying. What would your advice be on the stock now?
Yes, Abhi, thank you for having me on your show and good morning. I think we've never been positive on Ola Electric since its listing. And it had a fabulous listing and a lot of fireworks and a lot of froth and speculative activity. But now I think gradually reality is sinking in. It's not an easy business. And I said before that it's not a platform business where you can suddenly just scale up once the subscribers come on board and fixed costs remain static. This has got a high variable cost involved over here and a lot of competitive intensity as well. And no clear roadmap as to when they will turn completely profitable. So from that point of view, I think we've always been avoiding Ola Electric. And even at these levels, I would be a bit bearish on the stock, especially disappointed with the volume numbers, which have been coming down month on month.
Okay. All right. Hi, Dipan. Good morning and good to see you. And Dipan, I wanted to ask you about the metals pack. You know, the stocks have run up considerably. That hope of that stimulus didn't really come about, but now there is another pressure that's taking place later this week. So that's why from the lows yesterday, the metal stocks moved up. Would you look at playing this, at least in the near term, if it's got the momentum, valuations aside, will you go in for it or you want to stay away?
Good morning, Nigel. Yes, of course, metal stocks have gone up because of the China stimulus and expectations that prices would go up over there. But our view is that China is the structural changes taking place over there. And there's a lot of overcapacity when it comes to metals in China, and they're not going to rebuild China or spend extensively on housing and infrastructure projects as they did in the past, which was driving growth for metals. So I don't think that this metal rally is sustainable. And it's a good trading play. I mean, from time to time, we keep getting news flow on metals, so they go up, they go down. But from an investment perspective, even with a 3 to 5 year type of a view, you're not getting an entry at an attractively low price to earnings multiple. I think the way we used to buy steel stocks or aluminum stocks were more like single-digit P multiples at or around book value. But that's not the situation that, as of present, where a lot of metal stocks are trading at significantly higher valuation than their historical averages. So for me, it's an avoid.
Okay, got it. This whole situation on Star Health, Dipan, just if you could come in on this. We don't know how the stock will react. Obviously, the company is saying that they're working to rectify it. It's a really huge data leak, right? And all kinds of allegations are flying around. But what's your take on the stock, on the business per se? And would any dip be a buying opportunity or would you stay away?
No, I think it's a great company. And if you want a pure play medical insurance company, then certainly Star Health fits that criteria. But I think the performance could have been better. It's not optimal and it's not running at its full potential, I would say. And it's not that valuations are also cheap. I think growth rates could have been higher for us to be positively inclined to have a positive view on the stock. Broadly, I think it's not an industry which is very easy to kind of play. And there's a lot of competition also coming up. Recently, LIC also wants to get into this medical insurance space, and that could be a bit of an issue for Star Health. So I would just like to wait and watch, maybe at corrections, look at it more positively.
All right, Dipan, stay with us. We're going to take a quick commercial break here. We'll come back.